Welcome back. So let's do one thing. Let's get a quick handle on what's happening in the world of commodities. Manisha Gupta is joining in. Manisha, what's been buzzing over there?
A lot of things really, Sonia, but I'm looking at copper yet again because we've seen nearly 5% of gains in the overnight markets, and in the US, the crude price, rather the copper prices are now trading at an all-time highs. It's trading at a two-year highs on LME, but on CME, on Shanghai, and in the Indian markets, it's an all-time high that you are seeing in case of copper prices here. Very strong gains is what we saw in the month of April, and May really seems to be building up on that. Well, if you look at the CME copper prices, we are at $300 in premium to the LME prices right now. So that tells you that the US demand clearly seems to be picking up on ground, and there is tightness in the immediate delivery in sense of copper, and that really seems to be supportive. In any case, the long term continues to be bullish. There are tight supplies. We have seen CME copper inventories decline by 30% since late March, and that has been supportive for the prices there. The Chinese economic data seems to be on the positive side, and the latest tranche from China in sense of 1 trillion yuan in bond issuance is something that really seems to be supportive. China, remember, consumes 50% of the global copper. So whatever happens in China does impact the copper prices there, and we have seen that impact working in as well. As I said, for the near term, the inventories seem fine, but it is the longer term, 2025-26, when the markets believe that this demand will be higher and supply will not be able to catch up. The Chinese copper smelting also has declined by 10% in 2024. So there are various factors in sense of supplies which seem to be supporting the markets right now. And the demand also seems to be coming in from the electricity and EVs, but also from weapons. There's a report that suggests that there's a lot of demand coming in from defense as a sector as well. And then you have green energy, data centers. So demand for copper going forward in the next 2 to 3 to 5 years does seem very, very strong. Now, this is a very interesting chart coming in from Bank of America, which does show you on what the global production and global consumption numbers look like. So I've taken the last year where you have the global production numbers at 25.9 and consumption slightly lower than that. This is also a year when you are working with a surplus. Now, this year, when you look at the markets, that surplus seems to have gone down. While the global production has gone up, so has the global consumption, and by leaps and bounds. Now, for next year, we are turning into a deep deficit year. So while the production does stand at 27.6, the consumption is expected to grow many-fold, and that is what the markets are factoring in case of prices right now. Is the reason you have Goldman Sachs, Bank of America, Citi, everybody suggesting that $10,000 a ton is now done, and $12,000 is what they're anticipating in the next 8 to 12 months.
Okay, thanks a lot for that. We'll take a quick break. We'll get chatting with Ankush Nijhawan and Gaurav Bhatnagar of TBO Tech on their stellar Dalal Street debut. Stay tuned.